We have here with us Tom Nelson. He is a fund manager at Guinness Atkinson Asset Management. Welcome to you. Now, first of all, you oversee about £120 million, and that's entirely in oil and gas stocks, and you're holding BP.
That's correct,
Have
yes.
you sold any BP?
We have maintained our position in BP. So we have, where we've had money to put to work, we've been buying more BP, and on small outflows, we've been selling a little as well.
Okay, and so that means obviously that you are confident, despite this drop in share price, that it's worth holding on to BP at this time?
We are actually. I think what you have at the moment is an opportunity to buy BP on 7 times earnings, yielding 8%, which is a fantastic opportunity to buy a very high quality, long-term business on a very cheap rating.
Now, you, of course, say it's a fantastic opportunity, but people are looking at, obviously, the terrible pictures of what's happening with the oil spill, but also the cost to BP. And it's a cost that we can't even put a cap on at the moment because we have no idea how long this is going to last. Those figures look very frightening.
They do. And I think that the challenge at the moment is to try and differentiate between fact and fiction, between quantifiable cost and speculation about legislative change and the future of the industry. And we've run some pretty tough analysis on what this might cost BP in 2010 based on what it's cost them so far. And according to our estimates, looking at what it cost them over the first 20 days, which was about $20 million a day, if you extrapolate that out for the rest of the year, you get a cost for the year of about $5 billion. Seems a huge figure, but let's not forget that this is BP, which, according to our model, is generating about 20 billion of free cash flow after capital expenditure and acquisition.
An awful lot of people are interested in the dividend that BP is going to pay. Are they still going to be paying a dividend?
Yes, I believe emphatically they will. And again, it's very important to understand the numbers here, because there's a lot of speculation about comments Tony Hayward has made in the past and the strength of the dividend. In crude terms, excuse the pun, but what we're talking here is a likely dividend expense to the company of about $10 billion. I talked about a free cash flow after acquisitions and capex of about 20 billion. We might, if we're being punitive, we might take off that 5 billion for the potential expense this year. It leaves plenty of room for manoeuvre to pay this $10 billion in dividends. BP's balance sheet is also extremely strong. 7 billion of cash and equivalents at the end of the first quarter, about 26% debt to equity, which is not restrictively high. So even if there was a squeeze, if you like, or a sense of discomfort, that they could manoeuvre the balance sheet and take on a little more debt to do this. I don't think they will, and I think Tony Hayward would fight tooth and nail to protect this dividend. OK, well, you say Tony Hayward. That's if he's still there, of course. Yes. Do you think that a lot of people are saying that this will cost him his job? How confident are you that he should remain there, and will he? I'm very confident that he will remain in the job. I think he is the right man for the job. And I think up until this point, in the 3 years since he took the job in May 2007, he's done an excellent job. And this represents a huge challenge for Tony Hayward, a huge challenge for BP. It will be an uncomfortable period, and that's not to demean what's happened. It's an awful human tragedy, but I believe Tony Hayward is the right man to carry BP through.
And how happy are you about the way they've handled this from a PR perspective? Tony Hayward's obviously been, in the US working very hard on this. In other crises, thinking back to the Exxon Valdez, there have actually been protests at the pumps.
Yes.
Do you expect there to be that kind of fallout this time, or are you happier it's been handled better?
I don't, actually. I think BP, contrary to some of the US media coverage, I think BP have acted quickly, and I think they've acted well. And it's important not to lose sight of the fact that geologically and technologically, what they are trying to do here is fantastically difficult. This is 5,000 feet below sea level, freezing cold, pitch dark, and it's very easy to jump on the populist bandwagon and say BP have underacted or have under-communicated. They're doing everything they can, and they're the best people to be doing it.
Are you concerned that President Obama may decide, after looking at all of this, that there simply won't be any more drilling close to the shores in the United States?
I'm not, actually. I think one has to be realistic about it and look at the amount of oil that the US produces from the Gulf of Mexico. About a third of their oil comes from the Gulf of Mexico, and of that third, BP produce about a quarter. So though it may be uncomfortable to face up to this, the US needs BP, the US needs that oil, and BP are one of the best people to drill for and extract it. So I think, yes, I don't think in the long term this signals the end of BP or anyone else's drilling there.
OK, Tom Nelson, thank you very much.
Thank you.